Now, on Wednesday after the bell, I saw a lot of memes over the past day. They said Zuck went from Mr. Steal Your Data to Mr. Steal Your Girl. Oh, gosh, that's so funny. Meta's reporting after the bell on Wednesday. My big dog, okay? Now, Meta sets up tremendously going into these earnings, okay? Check this out. So, Meta's at a forward P of like 23 right now, right? This is taken from 1000xstocks.com, which, by the way, 1000xstocks.com, I think we're getting close to 200 people on the wait list now for that. If you want to join the wait list for 1000xstocks.com, you can go to 1000xstocks.com and join the wait list. I think we're close to 200 deep, and we got our first, folks using the service. And we should get some more folks tomorrow in the service as well. So Meta, it's not trading at a high valuation at all going into these earnings. And that's beautiful. I know the stock price has been a beast, but the valuation, not high at all for this company. So that sets up well, because if Meta was trading at a 39 forward P, I might feel different. I might feel like, that could come down a bit. Next thing you know, we could be, let's call it forward PE, we could pull down to a forward P at 32 if the stock crashed big or something like that. Is Meta going to go down in any substantial way and go down to a forward P at 20? I don't think so, because the bottom line is already very undervalued, right? Now, if we look at the numbers, the setup's great here. I love this setup for Meta. So this current quarter we're in, 26% revenue growth expected for the company. I think they got that. If they don't get me started, if they come in with a freaking 3 in front of that number, 600 quick. 600 quick. I'm not gonna go there. I think they're gonna have a 2. I think it's gonna be 20-something% growth. But I'm telling you, if they come in with a 30% growth number, it's game over. Meta's 600 plus, and it's 600 plus in like a very short amount of time. So 26% revenue growth, but I love this setup, because then analysts are they're at less than 20% next quarter, right? Now keep in mind, political spend is going to be coming in. Now when that political spend comes in, it's not just about, the money that's being generated from the political spend. It's about, then there's going to be a lot more ads that need to be shown, right? Which is going to push up pricing for then businesses and companies, right? That's the way the model works. It's kind of like almost like an auction. And if politicians need to get out there and run their ads, and companies also need to run their ads, who's going to get shown? Whoever pays up more, right? Which could definitely be very accretive to ARPU. It could be very accretive to what advertisers are going to be willing to pay. It's either you get seen or you don't get seen. And as a company or a business or a politician, you have no choice but to be seen. So you got to pay up. So less than 20% the June quarter. Then September quarter, less than 15% revenue growth expected. And then December quarter, 12.5% revenue growth expected. This setup is phenomenal. It's phenomenal for Meta. I love this. So we're going into this earnings with a stock that's not overvalued, and we're going in with a great setup like this where the stock's down going into the earnings, and we've got a situation simultaneously where, the revenue expectations just go down and down and down throughout the year. So it could be a year where Meta just sets up to just beat those numbers throughout the year, right? Now, on top of that, EPS is another tremendous setup, right? Obviously, an explosion of EPS in these 2 quarters, the one they're about to report here, and next quarter as well, because these had a lot of one-time costs associated with the cost-cutting measures they did and things like that, right? So 97%, 58%. This might be where you see some sort of epic beat from Meta that no one really had foreseen. You might see something more epic here than actually on the revenue line, by the way. But then September and December quarters, 12.5%, 15%, that doesn't even make sense. For instance, September quarter, analysts are at 15% revenue growth, and yet they're at 12.5% EPS growth. That doesn't even make sense. If Meta's buying back shares, that's going to help them out tremendously. Now, on top of that, it just doesn't make any sense. I'm like, okay, you guys can put up whatever numbers you want, but it's just like this to me is like investing 102 type stuff, maybe not 101. That might be a little more base level, but to me, I'm just like, just see these arbitrage opportunities. I'm like, are you freaking kidding me? They think Meta's going to have better revenue growth than EPS growth? Doesn't even make sense. Oh my gosh. And so the setup for Meta is epic. Epic. I love this. My gosh. And then the December quarter, 15% EPS growth with, 12.5% revenue growth. I mean, what a setup. That's the thing I love. It's not just about this quarter we're in. It's about the setup of next quarter, the following quarter, the back half of the year, right? Things are looking really good. Now, once again, if they come in and smash on EPS and they beat revenue, right? Well, then suddenly analysts are going to start upping all these numbers as well, right? Which will put more, then they're also going to have to come out, upgrade the stock. They're going to have to come out and, they're going to have to raise their target prices. They're going to have to come out and say it's a buy and it's a strong buy and just move more bullish, right? So the setups are tremendous for Meta. Now, also on the conference call, I can almost guarantee you they're going to talk about Llama 3 again and again and again. Now, some are going to understand what Zuckerberg and the team are talking about in regards to Llama 3. Some won't, and that's fine. But the people that will understand, I think it's going to matter for them significantly in regards to situation. Now, here's the deal, okay? Who's NVIDIA's biggest customer, or at least one of their biggest customers? It would be Meta, right? Now, NVIDIA could actually rally big on the back of Meta results. So let's say revenue and earnings per share is even better than expected. So let's say they actually up their CapEx a little bit. And let's say, they even mentioned something around, buying even more chips or things like that, right? Well, that could benefit NVIDIA. Phenomenal, right? At the end of the day, Meta's buying every chip it can from NVIDIA right now. And they're not the only ones. It's just about every one of these big tech companies literally NVIDIA couldn't send them enough chips, right? And I'd almost guarantee you Meta's going to be getting NVIDIA's newest, highest end chips as well, right? If you want to compete with ChatGPT, it's an arms race, and the arms race starts with NVIDIA, right? And so, Microsoft has to battle back, and at the end of the day, it all comes back to NVIDIA. And so NVIDIA is the one that benefits, and so all of a sudden NVIDIA could go on a major run this week as well, right? Now, on top of that, if Meta rolls, it could pull Google McDougal along the way on Thursday during the trading day. These stocks are very connected in terms of the stock price move. So let's say Meta's up 8% on Thursday. It could easily pull Alphabet, Google McDougal up, 2, 3, 4%. Because people, especially if Meta comes out and beats on revenue, people will look and say, Google could come out and beat as well. Especially if Meta had good things to say about the guidance, then people will basically front run Google's earnings, which Google earnings are Thursday after the bell. Okay. Now, in regards to Google McDougal, it's another stock that's not trading at a high valuation at all either. Forward P of like 22 on this one. It's a do-si-do. I mean, come on, baby. That's easy. That's cake. This is easy, sleepy numbers for Google McDougal. Remember, Google, up until recently, has always been a company that pretty consistently grows around the 20% mark when it comes to their revenue. So as far as where analysts are at, 12%, 11% for next quarter, 11% for the December quarter, 10%. I mean, this is an easy, sleepy setup for Google McDougal here as well. So Google could roll as well. And here's a beautiful thing. Now, you got to see these stocks all pull each other down over this past week, right? And you got to see, this stock pulls down this stock, and this stock pulls down this stock. It works that way, but it also works the other way in regards to the positive, right? Here's the deal. If Meta reports great numbers, right, it's going to pull up Google on Thursday. Then if let's say, Google then reports great numbers, then it could actually pull Meta on Friday, right? And then Meta and Google together can pull NVIDIA, especially if they at least confirm they're spending as much on chips as they thought and on CapEx in general, or if they even up that amount a little bit. Because let's say revenue is trending better. Let's say the business is trending better, so they're going to up CapEx another $1, $2, $3, $4 billion. That's just going to pull NVIDIA along with it. So all these stocks are interconnected, and if one report's really good and another, it pulls each other along. So that could get very fun very quickly, right? Now, that leads us to Mr. Softy, the biggest big dog of them all, the biggest market cap, right? It overtook Apple as the biggest big dog out there. This stock's down 6.5% or so in the past 5 trading days. They're reporting earnings this week. And what do we know about Mr. Softy? Mr. Softy comes through. Couldn't it go 5 for 5 in terms of revenue beats and EPS beats? 4 straight quarters has come in with very nice earnings per share beats and very nice revenue beats. I think they're going to do it again. I have no reason to disbelieve Microsoft's going to come through with the numbers. They do it every freaking quarter, man. They're 4 for 4 in a row. 22-cent beat, 14-cent beat, 34-cent beat, 16-cent beat. Those are extremely impressive. $1.8 billion revenue beat, about a $700 million revenue beat, about a $2 billion revenue beat, an $890 million revenue beat. Don't be surprised if Mr. Softy goes 5 for 5. Now, in regards to Mr. Softy, it doesn't move a lot. And this is important to understand, okay? Meta can move huge. NVIDIA can move huge. Google can move, let's call it mid-size. Mr. Softy's pretty lame. Pretty lame. Check this out, okay? For instance, the last earnings, the move was predicted to be 4.7%, which is pretty lame. Anytime your move is less than 5% after earnings, you're a pretty sleepy stock. It actually moved like 2.7%. And if you look on average here, Mr. Softy moves about 3.6%. So whatever Mr. Softy reports, it's going to probably be a small move. It will probably be less than a 5% move if not less than a 4% move. But knowing Mr. Softy, they're probably going to come through and report good numbers, and that's going to put another good halo around the NASDAQ and these tech stocks in general, right? Now, this leads into Amazing's which Amazing's the following week, but Amazon stock's going to move this week, and here's why. Amazon's now the 3rd biggest advertising giant out there, only behind Meta and Google, right? So let's say Meta and Google report very good things to say about the advertising business. Well, guess who that means great news for? Amazing's right? It means great news for Amazon. And then Mr. Softy's reporting, and they're going to have commentary around the cloud. If they report some pretty impressive cloud numbers, and it's not really based upon taking market share necessarily, it's just new opportunities out there, then that could bode very well for Amazon as well, right? And so a little food for thought in regards to that, which once again, these stocks all pull each other. So if you look at the biggest weightings for the NASDAQ 100, you're going to find 5 of the top 10 companies are reporting this week, right? Google's listed twice because they had their separate kind of class of shares there. But basically 5 of the top 10 companies are reporting this week. And then you got 2 of the top 10 that will be indirect moves, which would be NVIDIA and Amazon. Those would be big indirect moves, right? Based upon these earnings overall. So this could be a pretty epic week. The setup is beautiful. If we don't get any black swan event, I think it's looking pretty dang good for this week. Next stock up here, number 3 at 13, is NVIDIA. Now, the stock's up 218% in the past year, and it's still a buy. And NVIDIA is a buy all the way until growth ends. Whenever this growth cycle we're in right now comes to an end, NVIDIA stock will have a day of reckoning. But it's not right now, and it's probably no time soon. And we'll speak about that in just a moment. Here's the thing. NVIDIA stock trades at about 37 forward P, based upon analyst estimates, right? But here's the deal. 37 forward PE, that's very low considering the growth this company has. And also remember, analysts have been wrong across the board in regards to Amazon's revenue growth and earnings per share growth and margins. So if anything, that number might actually be too high. It might actually be a far cheaper forward P when all is said and done. But here's the deal. Amazon is expected to grow revenues nearly 70% this year. 70%? And you're only having to pay 37 times forward P? That's cheap. Insanely cheap, okay? Now, in regards to chip cycle, we're in a major chip cycle for NVIDIA. We're in year 1 of that chip cycle. Now, usually a major chip cycle for NVIDIA lasts between 2 and 5 years. If it's a smaller chip cycle, it's about 2 years. If it's a major chip cycle, it's more of a 5-year situation. So in regards to NVIDIA, we're in year 1 of a major chip cycle that my opinion's probably going to last between, I would push it more, because this is a major chip cycle, I would say probably more toward a 3 to 5 year chip cycle. And we just ended year 1. So we're going into year 2. So we probably have at least one more year, if not 3 more years, of this major chip cycle that we're in right now of upward pressure there. It's a very attractive stock still at this point in time. Markets are following NVIDIA's lead. Carry Firestone. This should be interesting.
Right now, again, futures lower, but pulling back from, steeper lows earlier right after these attacks.
Frank, I think it's a sign of the level of the reaction. It was, as Israel characterized it, a weak response. It was not an all-out military effort. And I think the market should feel relieved about that. The market has been jittery, which is my word, and very concerned about the escalation of this war between Israel and Iran. And for Israel to have essentially detonated Iran's military action, and now whatever has happened here has not resulted in much destruction, if any, because it has not been reported yet, I think is a very good sign for the world and for the market.
Okay, let's get back to the markets. Tech's been under quite a bit of pressure. It seems like it started when we saw a change in outlook when it came to the Fed rate cuts. But I know you're watching one stock in particular that you now say is probably the most important one in the market. It's NVIDIA, technically in correction territory, still up about 70% year to date, but in correction territory and trading lower this morning. These moves in NVIDIA, what does it say to you about the broader market?
Well, the market has been following NVIDIA, more or less. Remember, we were up 27% from late October until April 1st, driven by the AI march, and NVIDIA is the leader of that march. Now with NVIDIA weakening, and it grew to the third largest market capitalization company in the world, up to over 5% market cap, that's a sign that we're calming down the euphoria. I know it's been phenomenal for NVIDIA. It still doesn't trade at a very hefty multiple, but you can't have just forward march without recognizing that the rest of artificial intelligence has not been one of profit making as it is for NVIDIA. NVIDIA sells the chips. Everyone else buys the chips. And for slowing down here of this stock, it's just a sign that the rest of the market has to regroup.
Yeah, but here's the thing, okay? So NVIDIA is the infrastructure. They're building the highways, right, for these companies. They're giving them, maybe that's not even the best way to put it. I'd actually kind of say Meta is more of the highways, and what Amazon's doing are kind of more of the highways. And obviously Microsoft might be more of the highways. Microsoft might be more of the buildings for the city. I would say NVIDIA is all the commodities that you need to build the highways, right? I would say NVIDIA is the dump trucks to bring in all the gravel and whatnot, right? That's what NVIDIA is. And so without NVIDIA, you can't build the highway. You can't build the buildings that go in the city and things like that. And so it all starts with the commodities at first, right? And that's basically NVIDIA, although their products aren't very commoditized, right? So NVIDIA is that, and then you'll start to see in 2024 the highway companies, and even some of the ones that are building the buildings in the city, you'll start to see some of those actually benefit this year as well. You already started to see a glimpse of it last quarter with a company like a Palantir, right? You're going to see it and hear it a lot more in Microsoft's numbers. Wait till Amazon comes out. I think Amazon reports not this coming week, but next week. Wait to hear what Amazon has to say about AWS and some growth there. They'll probably be reporting the best growth they've had in several years for AWS in 2024 overall. So I think you're going to start to see other people benefit from AI outside of just NVIDIA. NVIDIA was really the only one who seemed to benefit last year. This year, you're going to start to see the Palantirs, the Microsofts, the Amazons, and the Metas and many others start to benefit from AI. But keep in mind, this is still like early like in the cycle of the AI story. So whatever numbers these companies post, it's actually small potatoes, as they would say. Small potatoes compared to what will be transpiring 3 years from now, 5 years from now, 7 years from now, 15 years from now. Okay, so that's just a little food for thought in regards to that. We're still way early in this game.
All right, so much to talk about, but can't leave without getting your WEX word of the day. What is it and why?
Yeah, well, that word is jittery, and I gave it to you yesterday. I mean, today would be another example. The market and investors are waiting to find out number one, if we have very good earnings, I mean, the market is up, multiples are up. We have to have earnings that justify the price of the stocks.
Okay, let's just cut her off. Let's just cut her off. So the market, jittery, all these sorts of things. I think it's more investors are jittery, or not investors, traders are jittery. I don't think investors are jittery. At least not really any I know. You know, we're all pretty calm, cool, and collected, looking for deals out there saying, hey, you want to send stocks down? Give me some of these stocks. You want to send Tesla under 150? Give me Tesla shares under 150. You want to send Nike under 100? Give me some shares of Nike under 100, right? So I think that's us. And by the way, I made a video on the main channel last night that went really into depth on 13 stocks that I think are deals, great buys right now. And so I think it's more of the traders. I've kind of gone a little bit sideways, maybe gone a little more towards shorting, maybe positioned out a little bit. Maybe they're jittery because if you're a trader, you got to worry about all this stuff. You know, if all of a sudden some black swan event happens and you're a trader and you're on the wrong side of that, you get destroyed quickly. And you know, if you're positioned wrong, it's very, very painful. If you're an investor, you're like, who cares? Like, I'm worried about the next 3, 5, 7, 10 years. Whatever's happening short term doesn't matter to me. If you're a trader, what's going on in the short term is everything to you. So there's just such a different mentality there. And so I don't like it if they say investors are jittery. No, it's not investors. It's traders are jittery. There's a big difference, okay? Appreciate you guys. Thanks for being here as always. We're now, I think it's 150 plus deep for 1000X watch list. So if you're looking to join the, or not watch list, the wait list. If you want to join the wait list for 1000X, you can go to 1000xstocks.com. Join the wait list there. I think we're like 150 plus on the wait list now at this point in time. Much love and have a great day.